House rent allowance or the HRA is a common component of salary structure for almost all working class. Altogether, it is a part of the salary HRA. Unlike basic salary, it is not entirely taxable. Subject to certain conditions, a part of the HRA gets exempted under Section 1013A of the Income Tax Act. The amount of HRA exemption is deductible from the total income before arriving at a taxable income. This helps the employee in saving tax. Remember, the HRA received is fully taxable if an employee is living in his own house or if he does not pay any rent. Here are tips as to know how you can save on house rent allowance.
Firstly, let us tell you who can avail the HRA. The tax benefit on HRA is available only to a salaried individual who has the HRA component as part of his salary structure and is staying in a rented accommodation. Self-employed professionals cannot avail this deduction. The next question in your mind would be, how much can be exempted? The exemption for HRA benefit is the minimum of actual HRA received, 50% of salary if living in metro cities, or 40% for non-metro cities, and excess of rent paid annually over 10% of annual salary. It has to be noted that the tax benefit is available to the person only for the period in which the rented house is occupied. Let us also tell you the most important part, which is about the documents. HRA exemptions can be availed only on submission of rent receipts or the rent agreement with the house owner. It is mandatory for the employee to report the PAN card of the landlord to employer if the rent paid is more than Rs 1 lakh annually or if it exceeds Rs 15,000 per month. Let us now tell you about individuals who don't get HRA but pay rent. There may be some employees who might not have an HRA component in their salary structure. Also, a non-salaried individual might be paying rent. For them, Section 80GG of the Income Tax Act offers help. An individual paying rent for a furnished or unfurnished accommodation can claim the deduction for the rent paid under Section 80GG of the IT Act, provided he is not paid HRA as part of his salary. And now comes the most important part, which is the conditions. While claiming a tax deduction, one must remember that the individual himself or his or her spouse or minor child or as a member of the Hindu Undivided family must not own any accommodation. Also, if the individual owns any residential property at any place and earns rent from it, no deduction is allowed. One can avail the simultaneous benefit of deduction available for the home loan against interest paid and principal repayment and HRA in case of your own home is rented out or you work in another city. However, the same is not available in the case of Section 80GG.